Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 17th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. This is the day before Fed Day and following a Fed Day Monday or Fed Week Monday, where we had a pretty light range of price action on Monday. Here you can see how quiet Monday's range was for the ES, and today in pre-market trading seeing quite a bit of strength here through Monday's highs and into new highs here above the 57.20 level. These are the highest levels that we've seen here since back in July, and we've actually seen price push beyond those levels. So these are now new all-time highs up here ahead of Fed Day on Wednesday. This market right now just came out with economic data, including core retail sales and retail sales. Core retail sales coming in a little cooler than expected. Retail sales coming in a little better than expected right here. And the initial reaction was a bit of a push to the upside, followed by a little bit of a retreat. So not a major response just yet. And still seeing overall bullish trending price action here, especially since that strong Wednesday low. We mentioned before that strong Wednesday low right there usually leads to a continuation to the upside over the next 1 to 5 days, and can also potentially lead to more strength over the next 1 to 3 weeks. We've seen this thing rotate higher, a rollover gap up here as well, as this market now reaches an all-time high. Not expecting a full-on runaway ahead of Fed Day. We could see prices fall back into the range here today, perhaps back towards intraday VWAP 57.10, and maybe even for a retest back at 5700. Any type of bullish continuation here would be a massive breach through resistance on a day prior to what will be likely the first Fed cut in a good long while, since 2020. So while we can have a high range Tuesday before the Fed Wednesday, it's not super often, but we can have one. So anticipating more of a 2-day development here to kind of take hold as this market awaits Fed Day up ahead, but still a very bullish bias at this time. We take a look here at the NQ. NQ also showing quite a bit of strength here against the previous session. Previous session here, relatively narrow range, and today here, overnight strength, pre-market strength, and just now on retail sales and core retail sales, we saw price spike to the upside on an intraday basis and then kind of back off those highs a little bit. The initial thought heading into today was that we would watch the previous session's highs closely. If a rejection occurs, we could see a near-term rotation back to the previous session's lows, followed by a push back up, and stay mostly within that 2-day range. Basically, again, developing a 2-day range ahead of Fed Day. So perhaps something like this back here, where you get a 2-day narrow range that develops, and then Wednesday could bring about quite a bit more volatility. So keep an eye here, but again, the overall strength remains to the upside. So you got to be cautious selling the top end here. If we do rotate down, it could be a much better opportunity to defend into weakness for a rotation back up. This market remains quite bullish, especially from that Wednesday rejection low, and we could be looking at a continuation higher overall up ahead. But again, the market is in Fed watch. Looking at crude oil. Crude right now seeing a bit of a test at the $70 level. 70, a very important short-term level right now, and this market has seen perhaps its best bounce in about a month. About a 4-day bounce to the upside, so not a significant bounce, but a decent enough bounce. Last time we saw something like this was toward the end of August on that 3-day move. Before that, it was the beginning of August on a 4-day move. We just really haven't seen a whole lot of strength out of this market. 1-day rallies, 2-day rallies, 3 days, 4 days, and then we see another rotation down. We are coming into a seasonal window of selling pressure that's going to start opening up in the first week of October. First week of October, you tend to see weakness that can carry you into the middle of December on a seasonality basis. So perhaps a late month rally here can take us higher, and then from that strength we see a better opportunity to sell it moving into the winter period of time. So again, while price could see a short-term rotation to the upside here, we could be entering a very bearish window of seasonality beginning in October. Keep an eye on 70 here. If price can continue to hold above 70, there could be a bit of a squeeze back towards 74 and beyond over the next several days. Looking at gold futures, gold is down about 0.4% here after reaching all-time highs over the last several days. We were looking for this one to see a buy the dip opportunity to begin the beginning of the month, and then the squeeze into 26 to 26.10, and we got there. On the first and second trading days of the month, we mentioned that pullback could be enough to get this thing going to the upside. Eventually we bounced, went a little sideways, and then got the upside expansion day here. That transition day opened up 2600, and we put a new high in just the previous session, 2617.40, new all-time high. This market continues to trend up not very nicely, but we do continue to see quite a bit of counter trend rotation. So after this new high, it wouldn't be out of the ordinary here to get a bit of a counter trend rotation followed by another attempt at new highs ahead. 2680 will be the next major market structure level up above. Looking at the YM right now has a very narrow range of price action, 31% of ADR, 191 points of range. The previous session here was quite a bit more bullish than its equity futures counterparts there, and was able to maintain acceptance above 42K for much of the day there, closing above that level late in the session. This market continues to see expansion to the upside. Again, last Wednesday here, strong reversal, and we've noted how a bar like that recently has been very, very bullish for this market after selling pressure. You'll see 5 days to the upside followed by several weeks up, several weeks up, several weeks up, and right now a very bullish start to the recent 4 days after that rejection. That's about what we would have expected there from a near-term perspective. We're now at all-time highs, and any pullback could still be seen as a buying opportunity for continuation up. Got to keep an eye on that high right there. That's the July high, and a rotation back below that level could open up a failure, but we continue to see overall uptrending price action, so any pullback could still be seen as a buying opportunity in this market. As of right now, could be in a holding pattern again ahead of Fed Day Wednesday. Looking at Bitcoin, a little bit of a bounce back day for Bitcoin today, up a day, down a day over the last several sessions. You saw a strong Friday, a pullback Monday, and now we're seeing strength in overnight and pre-market trading here in Bitcoin. This market continues to hold above the recent lows here, and again, really hasn't quite found its footing. As I've mentioned before, continues to be rather heavy. We continue to see lower highs and lower lows, a bit of a rounded price action on the overall range since about March, and this market could continue to see a bit more heaviness until we dip into Q4. Q4 could provide a recovery into the end of the year, especially if we get a wipeout early in Q4 for an upside attempt. But right now, even on strength today, it could be an up a day, down a day, where this thing rallies back toward 60K. The very next day we drop, and we're just kind of hanging in there ahead of Fed Day. Looking at ETH, very similar price action. The previous session, heavy down. Previous session was down 5 to 6% early, and right now we're seeing a little bit of a bounce back, but mainly narrow range of price action, 48% of ADR right now. You can see against Bitcoin, this thing has had a much more bearish downtrending market here than what Bitcoin is showing. We do have a narrow range developing at these lows, and there is the potential to lift back toward 2800. 2800 has been a lid for this market though, and 2200 has been a clear and significant area of support. We may need to dip below 2200 to get the next rejection, however. 2200 has been a significant area of support for the entirety of the year. The only couple of times it's dropped below it, it has seen massive rejections back above it. But we may need to dip back below it. If we drop into 2000 heading into Q4, 2000 could be an incredible opportunity for a rotation back toward 4K over the course of Q4 and perhaps into Q1 of 2025. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.